Hello and welcome to PQ Prime. I'm Neeral Dadia. A lot of movers and shakers in trade today. Metal stocks are in focus, FMCG in focus as well as a lot of stock specific action is what we've been witnessing. To discuss more on the same, joining us on the show is Vijay Chopra from Enoch Ventures. Vijay, welcome to the show.
Hello, Hiral. Good morning.
Good morning. Vijay, my first question coming to you is overall in terms of the metal pack. Clearly, if you see in terms of 2023, it seems to have begun on a strong footing for that sector. Last week as well, we've seen a good rally coming in terms of metal counters. Today's session as well, metal stocks are up in trade. What's brewing according to you? Is it the anticipation of price hikes that the Indian mills could be taking, plus an improvement that could be coming in from a global perspective and China reopening, which could lead to firming of international prices as well? How are you viewing the sector as a whole, and what would your top picks be?
Well, Hiral, I think that you have named quite a few that China is opening up. China is the largest consumer for metals, and so is India. And I think that, with the budget perspective also, I think this time we are going to have a wonderful outlay for the infra space. The reason is because we are already dealing with a huge problem of unemployment, and it's standing at 8.5%. Now, the
Mm,
government has a very tight rope to walk on. They have to create jobs, and in order to create jobs, infra space is the one sector which gives the maximum number of jobs. So I think there's going to be one, we need infrastructure also. Secondly, we need jobs. So infra outlay is going to be wonderful. So this would help a lot of cement and metal companies, because these are directly related to the infra space, to do well. And I think that India specifically, with so much of domestic consumption and so much of infra which should be developed, uh, my sense is that that the metals are going to be in a bullish range for quite some time, and I think it's a long-term bull run in metals. So my top picks would be Tata Steel, number one. Secondly, followed by JSW, Jindal Steel, Vedanta, Hindustan Zinc, Hindustan Copper,
mm,
National Aluminium. These are great companies, and mind you, a lot of companies were into huge debt. But again, post the pandemic, all these companies were able to, wash their balance sheets, and the balance sheets look much, much better than they were 3, 4 years back. So I think that metal companies should do well. A lot of them, like Vedanta, are giving good dividends. Hindalco gives good dividends, and I think that they are in a long-term bull run. So I think, as you also mentioned, that infra play is one part, global opening up is one part. Apart from that, our domestic consumption should do well, and even I
mm.
think that real estate, once the interest rates peak out and they start coming down, the real estate also should contribute towards the metal consumption, especially steel. Looking at 2023 on the whole, I think the second half should be much better. But markets always move in anticipation, and I
Mm.
think that they are anticipating that the offtake of metals should be good, with good balance sheets, healthy balance sheets. These companies should do well with 1 to 2 years perspective.
Right. So, do you think a right time to start nimbling on metal stocks at current levels?
I think that people are already late. We started it almost 8, 9 months back.
Mm,
But yes, if you want to pick up companies like Tata Steel, there is a lot of steam left. Look at National Aluminium or a Hindustan Copper. These are good companies. A lot of them are government companies as well, and these are the times when February, March, you get a decent dividend as well. Sale,
right.
Steel Authority of India also looks very good. So I think that public sector metal units also are looking very good on the charts, as well as fundamentally, uh, and they would give dividends as well. So good for people to start buying at these levels for at least a very short to medium term perspective for a dividend
Mm,
play.
right. Moving on, FMCG stocks are in focus as well, and it seems the biggies are actually, on an acquisition spree, specifically in the nutrition space. You have ITC, who's acquiring 100% stake in terms of Sprout Life Foods. Initially, they'll be acquiring 47.5%, and then later on, an additional stake would be purchased, right? Apart from that, you have HUL as well, which recently acquired stake in, I think, Nutrition Lab as well as Oziva. What's the story there according to you, and what do you think these acquisitions would actually mean from a segment perspective for a company like ITC as well as an HUL?
Yeah, so coming to the point where when the inflation is peaking, the and it is coming down. We saw WPI numbers were down a bit, and I
Mm,
think that they are going to slip further. So this means the input costs are going to come down considerably. Once the input costs come down considerably, the profitability increases for especially for FMCG companies. Look at edible oils. We saw edible oil selling for about 225 a kg to almost about 140, 150 now. So they have considerably come down. These are used in manufacturing of soaps and so many other things. So I think that FMCG, with falling inflation and falling interest rates, and the falling prices of commodities, are going to be the flavor of the season, number one. Secondly, why they are getting into the nutritional supplement market? Because health per se has taken a center stage, especially much more after we saw COVID happening. So a lot of people are working on their diets and their lifestyle patterns, the way they eat. And most of these companies did not have any health substitutes or health I know Oziva, I know Aarti Gill, who owns Oziva. She is working on wonderful health supplements, and the company has raised decent capital and done wonderful sales during COVID. When people were thinking the world has closed down, Oziva was doing wonderful sales. So these companies who are health companies, as you mentioned, Sproutfit, they do yoga bar and stuff. So these are good companies, good products, good value chains, I would say.
mm,
And I think that futuristically speaking, people are moving more towards healthy food and food habits. And these companies were having a maybe a, a gap, a caveat, which they're trying to fill up with these acquisitions. So they have cash on the books. So it is a rightful move. And companies like ITC, Hindustan Lever, Marico is also always has been into health. So these companies which did not have that kind of a health product line, they're
mm.
getting into it. Recently I bumped across Haldiram oats. So Haldiram, which is known for their
I know
typical
the
high calorie diet or high
yeah.
calorie stuff, they're also coming to the breakfast table,
So
and the
so
health
so
part. Yeah.
overall, Vijay, taking this, I mean, I know these are smaller acquisitions, and I think even these companies will be figuring their way out into this niche segment. Uh, from a valuation perspective, what would you advise an investor to do specifically with FMCG names like an ITC and an HUL?
Well, I think that both are good. ITC has one fear of, generally we see we are around the budget, and we see that there is a risk of, upwardly revision of excise in the budget, but that is a risk
Mm,
we have to take. So, if somebody wants to get into ITC, it is at a good level, I would say, valuation perspective wise. And one should wait for 15 days and let the budget be over, and then probably you can, buy big time into ITC. And even Hindustan Lever, I think, is well placed. Dabur is well placed.
mm,
We can buy it's not overvalued at all. So the big FMCG players, I think, should do well with at least 1 year perspective, because the input costs are coming down, and these are commodities. They deal in commodities, and once their balance sheet starts showing much more profit, they already have a distribution channel in place, so they can pump products and give schemes to distributors and so on and so forth, and sales can bolster, and the profits can also bolster. Their
right,
balance sheets would look much better 1 year down the line
right. So that's what
with better
FMCG,
sales.
right. Moving on, Delta Corp, that stock is under pressure post the numbers that they've announced. Also, the stock is in F&O band in today's session. Overall, what do you make of the numbers, and what would you advise an investor to do?
Well, markets do expect much more than what because this was the first full blown season after COVID, and people thronged into Goa. Even I was in Goa for a few days, and I saw that the expectations were pretty high. But again, I think that Delta would come up, and I see the stock going to about 250, 260. So the investors who are invested, don't worry at all, because people have started thronging, and they've started traveling and holidaying. And Delta's business is very much related to holidaying, especially in Goa, because most of their
Mm,
Delta and Royal and all are in Goa. So I think that no need to panic, no need to just exit. It's at a good price. It was trading at about 350 levels, 7, 8 months down before. So this can come up to 250. That would be a good level to book profits.
Right. Moving on, Vijay, railway stocks are in focus as well, and usually that's the trend that we see ahead of the budget. RVNL has been on a strong wicket as well, with the kind of order wins that it has seen in the last couple of months. What would you advise an investor to do? Because again, two projects that we're talking about, the Surat Metro Rail project as well as the Ahmedabad Metro Rail project phase 2, where the company has emerged the lowest bidder.
Hiral, I think that railway stocks were completely undervalued, and I'm very happy to see that they are discovering their value. Most of the public sector stocks are completely undervalued. Look at the metal stocks we talked about. Companies like you know uh, Hindustan Copper, and these they have great mines. National Aluminium. Similarly with railways, the assets these companies have, the business these companies have, it is humongous. But yes, we have seen a decent move already. I think that the stock can move up to 85. That would be a good time to book profits. Don't be greedy at these levels. Wait for the correction to happen, because we are seeing an up move happening right from almost 30 levels to almost 80 levels. So the stock has actually more than doubled. So people who have been invested from lower levels should exit around 85. It would be a good level, and wait for some correction to happen. Again, it would be a good entry level, if it comes around 55, 60.
Right. So that's with regards to RVNL. Moving on, the last talk that we want to discuss today is Nykaa. One of these new big boys. In fact, all of them have been in focus in today's session as well. If you see the kind of downtick that we saw, the stock has fallen the most in over 3 weeks since December 23, 2022. What would you make of a Nykaa from here on? Do you think it's the right time to start looking at the stock? Or do you think from a valuation perspective, it's still expensive?
Hiral, I'm a great fan of value and not valuation. So all these new e-commerce companies, they came on a bandwagon with a lot of valuation, and there was practically very low value or less value in the business. Even now, Nykaa trades at a price to earning of 835. This is irrational, and I would say criminal to some extent, because these companies come up and with all those advertisements, they just blow off the minds of retail investors, and they get caught up and trapped in the higher valuation, just because what they see is they believe, but actually they do not see the balance sheets. People do not do that kind of research. So I would not recommend until the sales number happens. Last year they clocked the sales of 3700 crores. Vis-a-vis, they still have a market capitalization of 37,000 crores. Look at a Chennai Petro. It is doing a sales of about 65,000 crores. The MCAP is about 3,000 crores. So why not buy a Chennai Petro, and why one should get into a Nykaa? So I would recommend that until we see revenues and profits happening, no point of getting into the valuation web, I would say. And I think that people, they should get out on rallies and look for value in the business, look for longevity. A company would survive only if they have profits on the books. The private equity money won't. These people can pull the plug. This private equity, this money which flows into several companies, they can just pull the plug. Look at what happened to Snapdeal.
Right.
It can happen to FSN e-commerce as well. So I would say that don't get into the valuation trap. Look for value in.
Absolutely. That's the view coming in, and specifically with the big e-commerce players which have just been newly listed. Thank you, Vijay, so much for joining us on the show and sharing your views for all the investors as well. Thank you. Stay safe and speak to you soon again.